Alright, gang, good afternoon. I hope you're doing well. Hope you enjoyed your weekend. Let's go ahead and jump right into this. I actually got a decent list for you guys. 5 going into next week. 1 future, 4 stocks. Well, let's go ahead and jump right into this. So the first one that I'm looking at here is going to be corn with a vertical spread or a short put if you like to go naked here. But as you can see, we got a nice little squeeze building up. Corn's been in a good rally, consolidating a little bit, holding those moving averages. So what I want to do is go ahead and sell a vertical spread right down just below that 50 moving day average for this squeeze to build up and shoot up and hopefully here break out of those highs. Okay, so with corn, nice IV. We're looking in May to give it a little bit more time. 26, you could do 26 days, but it's little short. So going out to May, that's going to be 54 days if you're not with Tasty. And what I want to look to do is sell the 670 puts and buy those 655s. Okay, right around 4.25, right, to 4.375. That's going to give you just over $200 in profit. It will max loss you at only like 500 and change, giving a 71 pop, which is really good for a defined risk play. If you want to go ahead and go naked with it, you can get a lot more credit here by just selling those 670s with a 650 in credit at $13. Okay, it will cost about 2,500 bucks, but you do get a reasonable amount of credit. And you can go a little bit further out, maybe head on down here to like a 10 delta, 630, 635 to raise your probability and still get very close to $300 in credit, and it will drop you down just a hair to 19. Okay. The next one that I'm looking at, you guys, is going to be AMC. Now, it's been a while since I traded this one just because it was so volatile with the Wall Street bets thing. But after, some downtrend, some consolidation, we've seen it take off here a little bit. And, excuse me, looking at the TIMA, which is the triple exponential moving average, just a little bit more smoother, a little bit faster on the turn here to give you a directional change. As you can see, it was really strong red all the way down, but we're getting that upward momentum come in, and there is a green color change here. So there is some upward momentum coming onto this one. All right. So AMC, it does have pretty low IVR. So what I'll be looking at is a debit spread, just a $1, $2, $3 wide here. And buying those 19 calls, and this is April 29th, by the way, so 33 days out. This is buying the 19 calls and selling those 22s. If you can pay, right, this is not a credit, but debit. If you pay between $1 and $1.05, that's not bad. You're risking one to make two in this case, roughly a 50% probability, and you really want to go for about 25% of max profit here. Okay, so about $50. All right. Next one that I'm looking at here is going to be AMD. I actually want to play this one to the downside to get some short delta. And the reason why is, as you can see, what I'm looking at is the 145s, and you have a lot of resistance in the way. You got 124.5 pretty much, 133 pretty much, and then 140 as well. So there's a lot of resistance coming up while getting, $30 out of the money here. So when you look at AMD, and again, this is going to be April 29th, so only 30 days out. I want to sell those 145 calls, okay, about $1.15, $1.20. It's going to give a 90% probability, all right? And then if you need to define it, I would stick with only a 30, 135 for $1. It's not quite that 1/3 the width, but because it is a call side, it is harder to get reasonable credit when you are defined. So I wouldn't go any lower than the 130s. You only have one set of resistance there when you do that. Okay. And then here I'm looking at Baba play. Baba's another one that's got upward momentum coming into it. And as you can see, it also has a nice TIMA color change. So a lot of upward momentum. So I want to take this one to the upside. Okay, selling down right around support here. And with Baba, this one will give a little bit more time, going out to May monthly, and that's selling the 100 puts and the 95 puts, buying the 95 puts behind it. $1.30, $1.35 would be ideal. It gives a 65 pop. And again, like I said, you are defined risk. Okay. And then the last one that I'm looking at is KWEB with a strangle, slightly long, but still giving a little bit of wiggle room here. Okay, so KWEB, much like most Chinese stocks have, dropped down, but we consolidated, dropped some more, and now we're consolidating again. So I'm looking at selling a call up here at some resistance, and then just below gap fill is where I want to sell that put. Okay. Excuse me. So this is again April 29th, so it's only 33 days. So don't plan on being in that long. I want to sell those 22 puts, sell those 39 calls. Okay. 60 to 65 cents would be great. 83 pop, like I said, slightly long, only just barely. And you know, at 60 cents, that's $120, and buying power is $1,200 if that. So that's it, gang. That's all I got for you. Those 5. Hope you guys have a great rest of your weekend, and one day I hope to see you in chat. Thanks a lot. Take care.